In this video, you will be getting a basic guide to personal finance. Personal finance is the system in which your money flows from income to savings, investments to physical stuff. Some people have better systems set up in place than others. But financial literacy is a critical life skill because it allows you to have a better quality of life, financial stability, and the opportunity to build wealth. Hey, welcome back. I'm Iris. I talk about all things money and life tips, so subscribe to learn more. In today's video, you will be getting a basic guide to personal finance and learn about income, checking accounts, savings, credit cards, investments, and retirement. Your money is likely flowing from some source of income, like a job, a side hustle, something along those lines. When it comes to money management, it is not about how much you make, it is about how much you keep. You can be making multiple six figures a year, but still living paycheck to paycheck simply because you don't know how to handle your money. A lot of people think, oh, I'm a college student, I don't make enough money to manage or learn how to invest it. So they end up pushing off learning about financial literacy way later for when they have more money, but then come to find out, as soon as they start making more money, they're still living paycheck to paycheck. How you handle small money is how you handle big money, which is why it's important to get a grip on your finances wherever you're at. And I will show you why using my two friends. This is Mallory. Throughout college, she never learned how to budget, invest, or save her money. She put it off for later when she got a big girl job because she thought when she started making more money that she would magically just know what to do with it. Instead, as soon as she graduated and started making a $100K post-grad, she started inflating her lifestyle and spending all of her money. She is still living paycheck to paycheck and has massive credit card debt despite being a high income earner. This is Ricky. Throughout college, she learned how to save her money, budget, and invest. She learned how to be responsible with credit and manage her money. By the time she graduated and secured her first post-grad job, she's now using her new income to increase her savings and investments. She has a six-figure net worth, a fully funded emergency fund, and zero credit card debt. You see, Ricky started building those habits very early on, so by the time she started making more money, she was ready to handle it. It is these small compounding habits that will lead you towards that path of success. It's not about how much you make, it is about how much you keep. Now, once you get your income from your job or your side hustle, this will flow into your checking account. This account will function as a home base. Your money will flow into here, your money will get sent out from here, and some bills will get paid out of here too. This account is honestly boring and will likely not make you any money, which is why it's important that this account mainly functions as a pass-through and this isn't the last stop for your money. Because if all you do is leave your money into this account where it's not earning you anything, you're actually losing money thanks to inflation. So a general rule of thumb when it comes to checking accounts is to only leave about 2 months worth of expenses inside of this account. After this account, your money will flow into your savings. How much is your savings earning you? If you can't answer me that right away, then you need to move your money into a high-yield savings account like yesterday. A high-yield savings account functions exactly the same as a traditional savings account, but it will allow you the opportunity to make some passive income through interest income. These accounts offer you a higher APY, which allows you to make some interest on your money that's going to be parked there anyway. I make around this much per month completely passively just for having my money sitting in one of these accounts. I mean, think about it. This is money that you already have set aside anyway. These accounts are completely safe to use. Just make sure whichever bank that you do choose is FDIC insured. And I will leave some of my top recommendations up here somewhere. And just for reference, I personally use Discover. Now, within this savings account, you need to have an emergency fund that lives inside of it. An emergency fund is easily one of the most important money milestones. And if you don't know how much to keep in your emergency fund, experts suggest having 3 to 6 months of expenses tucked away in a high-yield savings account. So go through all of your expenses month to month, everything that you need to survive, and multiply that number by 3 or 6, whatever you choose. An emergency fund obviously saves your butt in case of emergencies, but it also keeps you out of debt and it leaves your investments untouched. A lot of people end up going into debt because their car breaks down and they don't have the cash available, so then they put it on a credit card. And what's the point of having investments if you don't give them the time to grow because you're always having to bust into it? An emergency fund is one of the most important money milestones, and this is one that you should aim to achieve first. I mean, you should have savings before you even start investing. It's that important. A credit score functions almost like a report card. It lets the bank know that you are a reliable person, and having a good credit score helps you get really good interest rates and get approved for loans. This will come in handy later down the road when you want to buy a car, buy a property, anything that you may need a loan for. Your score is determined on a few factors like your length of credit, payment history, debt level, and more. Credit can honestly be your best friend or your worst enemy. If you have a good relationship with credit, then you could later on down the road get into the credit card point game and learn how to travel for nearly free, which is why I personally love credit. But it has to be used responsibly. Your credit card will have a payment due date. You need to make sure that you pay this on time and in full every single month. Never carry a balance because that's how you get hit with interest. I have always used my credit card responsibly, and I have never paid a penny in credit card interest because it is 100% avoidable. If you have absolutely zero credit history and are looking to get started, I recommend looking at a student credit card. These are specifically designed for college students that don't have any credit, and I think the only requirement to get one is to be enrolled in college. And here I'll leave some good student credit cards as a recommendation. If you are not a college student and you are still looking to start your credit, you could also look into getting a secured card. These cards are designed for people with no credit or low credit, and how they work is you give the bank a deposit, and then this deposit amount becomes your credit line. And then after some time of using this credit line responsibly, they will graduate you to a normal line of credit, and sometimes you'll even get the deposit back. And here I'll leave some secure card recommendations as well. Investing is super important because your money needs to be growing, it needs to be keeping up with or outpacing inflation. Investing is when you buy something in hopes that it will go up in value later on and generate income. Now, just for an example, let's say you invest $1 later down the road, that investment grows into $5. That's kind of the whole principle of investing. It's a way for your money to grow over time. I mean, think about it. Do you want to clock in at that dusty job that you hate for the rest of your life? No, then you have to find a way for your money to work for you. Not only will investing help your money keep up with or outpace inflation, over the long term, it is also going to help you create wealth. You invest into assets. An asset is something that you own that holds financial value. Think stocks, real estate, index funds, and more. A stock is just partial ownership of a company. So think if you buy into some Tesla stock, you are now partial owner of Tesla, the company, which is really cool when you think about it. And now as the company grows, your share will grow with it. And stop right there. I already know what you're thinking. There are thousands of stocks to choose from. How do you pick one? And here's the thing, you actually don't have to pick one at all because you can just buy a bunch in one go. And this is what we call an index fund. An index fund is just a portfolio of stocks and bonds that track a particular market index. And then when you hear the word index, just think of list. So it tracks a particular list of stocks. Now, an even simpler way to think about this is an index fund functions almost like a multi-pack of socks. In one buy, you are getting multiple pairs of socks. Well, an index fund functions very similar to that, where in just one buy, you're getting exposure to thousands of stocks. And the crazy thing is, if all you did was buy into index funds, you would actually outperform the vast majority of hedge fund managers. And now a common index fund that you have probably heard of is the S&P 500, and this tracks the top 500 performing companies. On average, this index fund historically returns around anywhere from 7 to 10% per year. And I'll share with you the top 10 holdings of the S&P 500 here, and you're actually going to be familiar with most of them. Now, let's just say all you did was invest into this one index fund, you can potentially end up with gains as big as this. Thanks to the power of compound interest. So the earlier you could start investing, the better. Me personally, I keep my investing very simple and I primarily invest into low-cost index funds, and that's it. I just buy into index funds every single month and I buy and I hold. Now, you can start investing in several different accounts, but in this video, we will be talking about the Roth IRA. This is an individual retirement account that is funded with post-tax dollars. So think money that has already been taxed, like from your already taxed paycheck. But the cool thing about this account is that all the gains inside of it are tax-free. Like you saw earlier, the earlier you can start investing, the better. So think about those gains that we just saw. If you did all of that investing within a Roth IRA, that all could be yours because it is a tax-free account. And I will share with you here some places that you can open one. I personally use Fidelity. I really like Fidelity because I think the user interface is just very easy and simple. At the time I'm filming this, the max contribution for a Roth IRA is $7,000 per year. So definitely try to max this out year after year after year. Try your best to max out this account yearly because gains. What I like about this retirement account is that it is incredibly flexible. You get to pick and choose what you want inside of this account. Again, like I said before, I keep it very simple, and within this account, I just hold a bunch of index funds. And since this account has tax advantages, the way I do my investments is I prioritize all the tax advantage accounts first. So I'll prioritize my Roth IRA, I'll max out my other retirement accounts, and then whatever I have left over goes into a standard brokerage account. In the long term, taxes will really eat into your gains, which is why I prioritize the tax advantaged accounts first. Planning for retirement is your responsibility, and the earlier you could start getting started, the better. Also, if you never plan for retirement, be prepared to work forever. Getting started, getting your personal finances in order doesn't have to be overwhelming. It just takes small, consistent steps. And honestly, if you've made it this far into the video, then you're already better off than you think. Please hit the like button if you found this video useful and subscribe for more because I'll see you in the next one.